Good morning, everybody, and happy Tuesday. Today's June 25th, 2024, day two of my big vacation. But I am back here with you guys in the morning because we got a lot to talk about today, starting with Airbus, the second biggest plane maker in the world. We've been talking about Boeing seemingly every day here on this channel. Another crisis at Boeing, another problem, the financial fallout from their safety issues. And meanwhile, you'd think Airbus was doing great. You'd think Airbus would be getting all of these new orders as all the problems at Boeing keep piling up. But that's the opposite of what we are actually seeing this morning. Airbus, the big European plane maker, is out with lowered guidance for profits in plane deliveries for 2024. The stock is getting crushed this morning. First things first, they lowered their earnings guidance from $6.5 to $7 billion for the year, all the way down to 5.5 billion. I'm sorry, euros for the year, not dollars. We're talking in euros here. They also lowered their estimates for the delivery of aircraft from 800 planes down to 770. Now they're citing supply chain problems. Are we still talking about this? Can somebody check the calendar? Is it still 2021? Are we still blaming everything on supply chain disruptions? Is that like this magic fairy dust that we sprinkle on every corporate failure? We say, supply chains, that's the big problem. Or hey, might as well cry COVID while we're at it. Oh, this pandemic that's preventing us from making planes. Or maybe the demand for airplanes just isn't really what they're saying it is. Because you'd think people would be clamoring to get their hands on an Airbus jet right now because nobody can get a Boeing plane. Boeing has lowered their aircraft delivery estimates for this year, and they've been ordered by regulators to slow down. And all the planes are cutting, or all the airlines are cutting pilots, they're cutting flights because they just don't have enough planes. You'd think Airbus would be selling jets hand over fist, but they're not. They're actually cutting their profit outlooks. They're lowering their estimates. Something is going on in travel. I was looking around this morning, all the articles are still saying, hey, we expect record surges for travel. And oh, we're almost back to 2019 levels of airfare demand. Well, then how come nobody's making any planes anymore? Something is up in the airline industry and it's not good. You would expect Airbus to be doing great. That's not happening here. Also, speaking of plane makers, Boeing is in the news again this morning. They've changed their bid in their takeover attempt for Spirit Aerosystems. Now, Spirit Aerosystems is the company that makes the gigantic sections of fuselage for the big Boeing jets. Spirit Aerosystems, about 20 years ago, was spun off of Boeing into its own standalone entity, and it's now one of Boeing's most important suppliers. And Boeing has blamed a lot of the problems that they've been having, a lot of their safety issues, on Spirit Aerosystems' failure to meet company demand, to meet safety requirements. And so Boeing's big proposed solution has been to say, well, we're just going to buy Spirit Aerosystems, and the solution is to make our company even bigger. That's their big proposal. Like, oh, don't worry, safety will get better at Boeing. Oh, we're already talking about how Boeing is too big to fail, and what do we do? Well, let Boeing get even bigger. That's going to solve the problem, right? Well, that's what they're trying to do at Spirit Aerosystems. But the interesting thing in this story this morning is Boeing has changed their bid from an all cash takeover to an all stock takeover. And they increased the valuation at their recommendation. But the fact that they're going from cash to stock compensation, that's telling here. You recall a couple of weeks ago, I guess it was a couple of months ago now, we were talking back in April that Boeing had burned through $4 billion in cash in the first quarter because of all these new problems that they have, that they were expecting to burn through $4 billion in cash in the second quarter, which is now coming to a close pretty soon, and that the company only had $7.5 billion of cash left. And so if you do the math there, you could tell Boeing was about to run out of cash at some point this year. And well, if they're doing a $4 billion takeover of Spirit Aerosystems, that's all the money they have left. And if they're not selling planes and they're not meeting deliveries, well, now Boeing has a big liquidity problem. And so Boeing, in my opinion here, this change to go from a cash bid to a stock bid at a higher number is all about Boeing trying to preserve cash here because they're probably running low on it and they can't afford to keep burning cash at the rate they are and buy Spirit Aerosystems at the same time. And it seems like their big proposal for dodging all these safety litigations and everything that they're facing right now is to just buy up their suppliers and grow the company even more. Also going on this morning in the last 3 days, you may have noticed or may have not, Nvidia has sold off pretty hard. How hard did it sell off? Nvidia stock has lost over $500 billion worth of market cap in the last 3 trading days. That's almost the market cap of ExxonMobil that Nvidia has lost on a technical correction with no news whatsoever. Over 500 billion, a half a trillion dollars of value disappears on nothing. What is going on with this company? That is how big this AI mania has gotten. And if this is the kind of volatility that we can expect, I mean, I don't want to like be sounding alarm bells, and this isn't the bursting of the AI bubble, at least not yet. It's got to get a lot bigger before we start talking about this as the bubble bursting. But at the same time, losing an Exxon Mobil in 3 days, this is getting a little out of hand here, guys. The numbers have gotten so ridiculously big here. I mean, the percentage move, it's been about a 13% correction across 3 days. That's a pretty sizable move on a percentage basis, but it's not so much the percentage that's got me just amazed here. It's how big it's gotten. That's the amount of money that Nvidia has lost on no news without any catalyst whatsoever is more than the entire market cap of all but 16 companies in the world, about the size of ExxonMobil. That is amazing how much money Nvidia has lost just on nothing. This is just standard profit taking, it looks like. I guess there's like nobody in the world left to buy Nvidia stock because pretty much everybody has it. You can't ride an Uber right now without getting people telling you to buy Nvidia stock. So um, it's just really amazing how much value in a pullback that has everybody saying, "Oh, it's nothing. It's just a standard correction. It's no big deal. We only lost the market cap of the biggest oil company in the world. There's really nothing here to bat an eyelash at." What? $500 billion. Also, we've got Microsoft is back in the news today. Another EU antitrust suit. This time, they're saying that Microsoft conducted abusive bundling. What is abusive bundling? I don't know, but if you're going to bundle, don't be abusive about it. That's the message from EU regulators here. Uh, they're going after Microsoft, saying the way that they were selling Teams along with Office was a violation of their antitrust laws. Um, so last year, Microsoft decided, okay, we're going to unbundle Teams from our Office package, and the EU said that's not good enough. Look, I'm not really a big fan of big tech, and I'm not really a big fan of the European Union, but to me, this strikes me as just another bureaucratic cash grab. But then again, Microsoft does have a history of abusive trade practices that crowd out the competition. So, I mean, I guess no matter who wins this one, I guess society is the winner, is the real takeaway from this Microsoft EU story. Hooters is in the news today. Some of these jokes write themselves, so I'm just going to breeze right past that one. Hooters is closing 40 restaurants. So you can throw that in with Cracker Barrel and Applebee's and TGI Fridays and Red Lobsters. The restaurant business is hurting. Kind of reminds me of, hey, all those stories going on with aircraft and plane makers and airlines. And I see restaurants aren't doing so well either. Remember the Swiftonomics trade of last summer? Remember how everybody was traveling so much and eating out so much, and we couldn't understand where was all this GDP coming from? It ain't going to be there this year, that's for sure. Not with restaurants closing all over the place, not with pilots getting laid off and plane makers cutting back their delivery estimates. So it's this discretionary income that there's no cash left at the end of the month after the needs are paid for. There's no money to eat out. There's no money to go on vacation. And so the restaurants are feeling it. And another big story that I just spotted this one right before I hit the live button. Pool Corp, swimming pools. There's one we almost never talk about. But speaking of discretionary money not being there, that stock is selling off big this morning because they're also out with a warning, expecting a big decline in profit. They're lowering their guidance, and they're expecting a 15 to 20% decline in new swimming pool construction. And again, it's the best economy ever, right? People can't afford to put a swimming pool in their backyard. I guess too many Americans got a 1 year membership to the Jelly of the Month Club for a Christmas bonus instead of cash this year because there is a 20% decline in swimming pool construction because it's the best economy ever, right? Everything's so good. What's the matter with you guys and your bad vibes? You just can't tell how good you have it. And that's why nobody's building swimming pools anymore, right? A lot going on in the world today, guys. Why don't we shrink my big melon of a head and let's see what is happening in the world of finance? Don't forget that big thumbs up button for the YouTube algorithm while you're at it. And if you're new here, hit that subscribe button because we do this every business day. The S&P 500 is up 14 points as of this moment here, a quarter of 1% higher in the morning. The Dow is meanwhile down 52 points or about 0.13% in the red here. And the NASDAQ is doing pretty good here, up a 0.5%, 96.5 points to the upside. So maybe a little bit of an unwinding of that trade we had yesterday. Yesterday we saw the Dow was up pretty nicely, but the NASDAQ was down big. Partial reversal of that trade this morning with the tech stocks doing a little better and the Dow selling off. Meanwhile, the DXY is higher again this morning, up 17 basis points at 105.64. So a stronger dollar will be putting some downward pressure on asset prices here. And looking over at the bond market, we got the 30-year yield is at 4.379. That's up a fraction of 1 point this morning. The 10-year about the same at 4.250, up a fraction of 1 point. The 2-year, meanwhile, is up about a half a point at 4.738. And the 1 month is at 5.316. That's actually down a fraction of a point here. Which, again, that 1 month treasury, keep an eye on that. That has made a new low here these last couple of days. It was around 5.38, 5.39 for the longest time. Now it's actually starting to drop a little bit, suggesting those rate cuts are coming. And looking over at the commodities board here, we got a lot of red probably on that stronger dollar here. Spot gold is at 23.25. That's down about $9 this morning or 0.38% lower. Spot silver, meanwhile, is down about 16 cents at $29.42. That's about a 0.5% lower. September copper futures at $4.38, down almost 4 cents. October platinum futures at $1,000.04. That's down about 10 bucks. September palladium futures at 948, down almost 3% here this morning. And August WTI crude oil futures at 81.49, down about 15 cents. So we're down pretty much across the board in commodities. No real big moves there other than that palladium move. That's a pretty big one. Looking at the silver chart for just a minute here, we've got $29.40 for spot silver, still above that 50-day moving average that we've been flirting with for about a week and a half now. Keep an eye on that 50-day line. We want to be staying above that one. And looking over at Bitcoin, we've got Bitcoin catching a little bit of a bounce here yesterday. That was a pretty brutal sell-off in Bitcoin yesterday. It took us all the way down as low as about 58,500 yesterday. We were within striking distance of the 200-day moving average here shown in red, but we caught a nice bid into the close and we're bouncing again this morning. A little bit of a green candle here. Currently up $866, trading at 61,129 on Coinbase. So still lower than it's been for the last couple of weeks. Caught a little bit of a bounce. Watch that 200-day moving average for support there. Now let's get into some of these bigger stories going on this morning. Here's the Airbus one. Airbus shares fall 11% as the company cuts 2024 guidance on targets and deliveries. And again, I was very surprised to see this. You'd think Airbus would be doing pretty good here. Shares of Airbus fell by close to 11% on Tuesday after the company said it was cutting targets for 2024, including aircraft deliveries and earnings. Airbus said on Monday that it's now expecting its adjusted EPS before interest and taxes to come in at around 5.5 billion euros. It's about $5.9 billion US, down from a previous estimate of 6.5 to 7 billion euros from April 25th. The company also said it's now anticipating to deliver approximately 770 commercial aircraft this year compared to a previous outlook for nearly 800. Airbus also delayed its target timeline for ramping up the production of its A320 aircraft. Now, what was kind of interesting here is that they're blaming supply chain issues. This kind of seems like yesterday's excuse here. The guidance cuts are partly linked to supply chain issues in Airbus's commercial aircraft business, the company said. Airbus is facing persistent specific supply chain issues, mainly in engines, aerostructures, and cabin equipment, the firm noted. Airbus said it was also facing additional costs in its space systems division. It has recognized commercial and technical challenges in the business and was therefore recording charges of around 0.9 billion euros in the first half of 2024. So Airbus stock is looking really bad here, down almost 12% ahead of the open this morning, trading at 130 euros and 92 cents, down almost 18 euros here. So Airbus getting clobbered here. Let's check in with the other big plane maker, Boeing. And well, Boeing not doing so well either. Boeing talks to buy back Spirit Aerosystems have a last-minute twist This one hit yesterday morning, just after we wrapped up. Well, actually, last night, this one hit. Jet manufacturer has proposed using mostly stock to reacquire their supplier. Boeing has proposed funding its acquisition of parts maker Spirit Aerosystems with stock rather than cash, according to people familiar with the matter. A last minute twist in deal talks that comes as the jet maker burns through more than $1 billion a month. Boeing and Spirit, a jet fuselage maker it split off 2 decades ago, were closing in on an all cash deal this weekend when Boeing switched to an offer consisting largely of company stock. The two sides discussed a deal that would have Boeing paying more than $4 billion for the two-thirds of Spirit's business that supplies it with its parts. As part of the deal, Spirit will shed operations that makes parts for Boeing rival Airbus, which accounts for about one-fifth of the plane maker's revenue. Spirit makes parts for Airbus at its factories in North Carolina and Belfast, Northern Ireland. It also makes parts for defense companies. Now, Boeing, which initially planned to fund the deal with cash, said in May that it was considering a variety of funding options after the company burned through nearly $4 billion in the first quarter and predicted a similar hit in the current quarter. The company ended March with $7.5 billion in cash and investments. Spirit has been at the center of quality issues affecting 737 MAX jets after the Wall Street Journal first reported that the two sides were in deal talks. Boeing said in March that it believed buying back Spirit would improve safety and quality of its manufacturing. And yeah, I guess that's Boeing's approach is like, yeah, we're going to buy back Spirit Aerosystems and then we'll kill all the whistleblowers and we'll improve the assembly line and everything is going to be just fine, right? I'm sure that, oh, I'm sorry. Did I mention that thing about the whistleblowers out loud? Sorry, guys. Freudian slip there. Didn't mean to say anything. Look, if Boeing's problem is Boeing has gotten too big and too much of a bureaucracy that safety has taken a backseat to profits, then making Boeing bigger sure as hell isn't going to solve that problem. It also is beside the fact that I don't think Boeing can afford to buy Spirit Aerosystems here. They're almost out of cash, as that burn rate was suggesting. Almost $1 billion a month they're burning through in cash right now, and they were at $7.5 billion at the end of March. Well, it's not too hard to imagine that they're right now they're probably at just enough cash to buy Spirit Aerosystems and nothing else, and then the company would essentially be completely drained of liquidity, which they can't do. So now they're trying to get this deal done for stock instead of spending the last of their money here. But Boeing stock right now doing all right this morning, down another 1.5%. It was actually up 1.5% yesterday on that news that the DOJ had recommended criminal charges. It goes to show you what the market thinks of the Department of Justice right now. $176.30 for Boeing stock, down $2.80 ahead of the opening bell. Also, along the news of along the lines of discretionary spending, we got this one. Hooters closes several underperforming restaurants. We're going to leave those jokes alone this morning. Hooters is the latest chain to close dozens of locations across the United States, blaming tough economic challenges, including rising food and labor costs. I thought it was the best economy ever, but like many restaurants under pressure from current market conditions, Hooters has made the difficult decision to close a select number of underperforming stores, a spokesman told CNN. The number I have heard, according to my moderator, Mish, thank you, Mish, was 40 restaurants will be closing as a result of this across several states. And at the last bit of the article here, they're saying it's not just Hooters feeling the financial brunt from cash-conscious customers. Applebee's, TGI Fridays, Boston Market, California Pizza Kitchen, and a bankrupt Red Lobster have all recently closed restaurants. We'll throw Cracker Barrel on that list too. Look, guys, the restaurant business is really hurting here right now. Inflation is squeezing their profit margins. It's driving their food and their labor costs up, but they can't raise menu prices because people can't afford to eat out anymore. So the restaurants have lost pricing power, and a lot of these restaurants are going out of business right now. Pay attention, all you guys who watch the job market, because we've seen in the jobs numbers here and all these streams I've done over the last year and a half, part-time jobs has been really what's created this illusion of strong demand for labor. Well, those part-time jobs are not going to be there much longer if these restaurants keep closing. Soon we're going to be shedding full-time and part-time jobs. That's when the market starts to panic, I think. Once we break above that 4.5% unemployment level, that's when bad news becomes bad news again, when people realize, oh my God, the bureaucrats and the muckety mucks on Wall Street don't have things under control. They've actually just made things worse. I think 4.5% unemployment is where that happens. Also, this morning, we've got Nvidia slides 13% in 3 days after briefly becoming the most valuable company. The numbers here are really just staggering. More than $500 billion of market cap has been shed on nothing. And that's the thing. It's not like Nvidia came out and guided light. They didn't come out and admit, oh, we've been faking our revenue with round tripping and investments in customers. And we've been using shady accounting gimmicks to make our growth look bigger than it actually is. And there really is no organic demand or organic growth for our GPUs once private equity stops funding all these cash losing AI companies. No, none of that happened. Nobody admitted to any of that. This is just a technical pullback, and $500 billion goes up in smoke. That's how big this thing got. Since briefly becoming the world's most valuable company last week, Nvidia has dropped for 3 consecutive trading days and is now down 13% from its peak. Monday's slide was the chipmaker's second steepest drop of the year, as the stock fell 6.7% to $118.11. Again, this is post-split numbers we're talking about here. Nvidia's decline brought with it a slide in chip makers and other tech companies that have been tied to the artificial intelligence boom. Super Microcomputer, which sells servers packed with Nvidia's AI chips, fell 8.7%. Dell, which competes in that market, was off 5.2%. Chip designer ARM Holdings dropped 5.8%, while semiconductor giants Qualcomm and Broadcom dropped 5.5 and 3.7% respectively. It was a bloodbath in tech yesterday. Many of these companies have been some of the biggest gainers in the last couple of years as investors bet heavily that they'll be the prime beneficiaries of the wave of AI spending. Now, take a look at the chart of Nvidia stock here. This just since the start of the year here, guys. I mean, this stock has done nothing but go up. I mean, we started the year split adjusted around $46 a share, currently trading at 121. It's up about 3% pre-market this morning. It's clawing back about half of those losses. So the stock more than doubled this year, actually closer to a triple than a double here. And, again, the AI mania, nothing new here. We've all been watching in disbelief as this has been happening. And now all of a sudden we get this little bitty pullback right here. That's it. Just that little bit at the end. All we're talking about is this little 3 red candles here. That is the entire value of ExxonMobil. Just poof, gone. And everyone's like, no big deal. Buy the dip, bro. AI is going to quadrillions of dollars and there's so much demand and we don't have enough compute and all that other stupid crap that the AI bros say. Look, guys, you're not supposed to just dump an ExxonMobil just on a whim. These numbers have gotten so big here. At some point, somebody's got to realize, hey, what are we actually getting for our money? What is the company actually earning? What is the multiple we're actually paying for this? People still aren't asking that question. So I think Nvidia probably still has more room to the upside. I don't think this bubble actually bursts until we get Nvidia guiding light, forecasting lower growth. I think then the market comes to its senses and starts to ask questions about what it's buying. So in the meantime, I'm still leaning towards this is just a technical pullback before Nvidia resumes higher. But again, manias and bubbles are very difficult to predict. Who knows how high they can go? We all know how they end with a big vertical red candle, but it could still go a lot higher before we get there. Also going on this morning, another story about EU going after a big U.S. tech firm. We were just talking about this one yesterday with the EU going after Apple. This morning, it's Microsoft. EU charges Microsoft with abusive bundling of Teams and Office, breaching antitrust rules. Let's see. The European Union on Tuesday accused Microsoft of breaching antitrust rules with the abusive bundling of Teams and Office products. Guys, if you must bundle your products, please don't be abusive in doing so. I have no idea what that means, but EU apparently has a big problem with that. The European Commission has informed Microsoft of its preliminary view that Microsoft has breached EU antitrust rules by tying its communication and collaborative product Teams to its popular productivity applications included in its suites for business, Office 365, and Microsoft 365. The European Commission, the EU's executive arm, said in a statement of objections, which it sent to inform companies of concerns raised against them. And once again, if the Commission decides that an infringement has taken place, once companies have responded, it can ban the conduct and fine the charged company up to 10% of its global revenue. And there's that same maximum fine, that number that they were throwing around with Apple yesterday. These are massive numbers. 10% of Apple or Microsoft's global revenues here. Just, and in my opinion, this is another big cash grab by the bloated bureaucracy in the EU. And I'm no big fanboy for Microsoft or big tech by any measure here, but I despise big government bureaucracies even more than I despise big tech. So keep an eye on that one. That could be material to Microsoft's earnings if they decide to go all out with it, or this could just be another in a long line of antitrust things thrown at them. Also going on this morning, Pool Corporation. This was an interesting one. We don't usually talk about swimming pools. Fact though, I used to build swimming pools. That was my summer job when I was in my 20s. Good times. Pool Corporation sheds 11.6% after hours and adjusts 2024 earnings guidance. Pool Corporation fell over 11% in after-hours deals on Monday as the company revised its 2024 earnings guidance amid slower demand during the swimming pool season. It's another thing to keep in mind. This is a vital time for the swimming pool industry. This is when they're making most of their money for the year. For the year-to-date period, Pool Corporation sales have been trending down approximately 6.5% compared to the same period in 2023. This is largely due to cautious consumer spending on big ticket items like swimming pools and outdoor living projects, resulting in a decline of 11% in building materials sales for the full year compared to the same period in 2023. Given the significance of the second quarter to the company's full year results, Pool Corporation has revised its expectations for the second quarter and for the 2024 fiscal year. As a result, the company is lowering its projected diluted EPS range for the full year to $11.04 to $11.44. That's down from 13.19 to 14.19. So big drop here in their projected earnings. Now, Peter D. Arvin, president and CEO of Pool Corporation, noted that the recent pool permit data indicates a consistent weak demand for new pool construction. And with the peak selling season nearing completion, the company now anticipates a decline of 15 to 20% in new pool construction activity for the year, with remodel activity potentially decreasing by as much as 15%. And Pool Corp stock is down also about 11.2%. So almost an identical move to what Airbus is doing this morning, projecting about a 20% decline in earnings. The stock's selling off 11 to 12% here. Look, the story here, guy, is discretionary spending. People are broke. They don't have the money to buy a new swimming pool. Clark got his Jelly of the Month Club subscription instead of that big cash bonus he was expecting. And so we will not be putting in the swimming pool this year. And I would add that this is an ongoing thing. If you have a slow year of pool construction, that means less maintenance revenue for the pool companies. That means less chemical revenue for the pool companies. So that's going to hit them year in and year out. Again, hey, it's the best economy ever, right, guys? Nobody can afford to put up a swimming pool. That's because things are going so well, I think, right? And I want to thank no one to no one. Well, thank you from nobody, Mr. No one to no one, who says, thanks for keeping the show going while I'm on vacation. You are most welcome, sir. Very rare. I haven't hit every single morning live. I have missed one or two in the year and a half since I've been doing this. But I will move heaven and earth to keep the show going, even when on vacation. So you're very welcome, no one to no one. Thank you, sir. I appreciate the super chat support of the channel. And thanks to my buddy, Alex Lieberman, for gifting 10 Nobody Special Finance memberships. Thank you, sir. You are a gentleman and a scholar. And guys, if you receive one of those memberships, be sure and send a thank you to Alex in the comments. Thank you, sir, for supporting the channel. Thank you to all my other Melonheads and Magnanimous Melonhead members while we're at it. Thanks, Metal Seer, who says Boeing will use AI to help it balance the value of human life versus the cost of quality controls. Sure, I think now we're thinking outside the box here, Metal Seer. Let's get Farmer Bro on the line and be like, yo, Martin, can we use your Dr. Gupta AI to figure out what a human life is worth? I mean, you're basically a spineless sleazeball and an unbearable piece of shit. Maybe you could tell us what a human life is worth. Yeah, we'll hook these two guys up. I think that'll be amazing for us to unlock a lot of value, certainly preserve human life, right? Because these are just very ethical, wonderful people we're talking about. Yeah, Boeing has pretty much tried every sleazy trick under the book except AI. Like, don't worry, artificial intelligence is going to help our planes not have pieces of themselves fall off mid-flight. And I think things will go really well there. Thank you, Metal Seer. I appreciate the laugh this morning, sir. And he's back. He's saying AI can be smart, but can it be wise? Well, as I've said often, Metal Seer, before AI can achieve intelligence or wisdom, it must first crack that count to three barrier. If you ask these AI chatbots how many R's are in strawberry, most of them will tell you two. got to break through that count to three barrier. You also got to tell people to stop gluing their pizza together and eating rocks. Yeah, wisdom is a ways off, let's just say, especially if we're going to train them with posts from Reddit. There's a lot of wisdom on Reddit. There's plenty of wisdom to be had. Thanks again, Metal Seer. And Nashville Pasta Man, thank you, sir. He says, I finished our pool. The material costs were minimal. It's all about labor, and you can find all the vids on YouTube. Look, I've done enough pool work to know probably not a good idea to try to refinish your own pool. Certainly don't be trying to change your own vinyl liners. But without knowing what kind of pool you have, I couldn't really tell you if it's a good idea or not. I can tell you I blew out my back trying to replace tiles on my pool that pop off every winter because water gets behind them and freezes. And oh, that's just wonderful work. The gift that keeps on giving is a swimming pool. I call it work creating. I never actually get to enjoy my pool. If I'm in my pool, it usually means like I'm in it working on something that broke down and fixing it. But I'm like, all right, if I'm going to be working on it, I might as well enjoy it at the same time. So half the time I spend in my swimming pool, I'm doing maintenance on it. I'm fixing it. That's fun. No, don't worry. That gets better with time. Thanks again, Nashville. And thank you, Alex Lieberman, who says, enjoy vacation. I'm trying, brother. We are going to enjoy that vacation. And that is a fantastic note to end on. Thank you, sir, for supporting the channel and for being a magnanimous melonhead. And thank you, everybody, for having your coffee with the melonheads this morning. You guys are awesome. Thank you to my channel members and Patreon supporters for everything you guys do for the channel. I got links down below to all that good stuff, should you feel so inclined. Hi, Mom. Hi, Dad. I love you guys. I'll see you guys tomorrow. Until next time, live small and dream big.